Hey everyone, this is Finding Value. Hope you're having a good day. I just wanted to go over a couple of things to make sure people understand that you just don't pile all of your money into the undervalued asset and not be at least somewhat diversified. So these cycles, they don't all come at once, and some cycles overlap each other. So you're going to be holding different assets in different quantities over time. So for instance, I have real estate as one of my assets. So I own real estate. And that cycle was at its bottom in 2011, 2012, 2010, in that time frame. So that's when you want to accumulate real estate. Real estate is now moving up. It's in an expansion phase. It's going higher. The back half of that expansion is usually inflationary. Interest rates chase inflation. They were raising interest rates before COVID. It was chasing that inflation in the real estate market because we're in the middle of a real estate boom. And precious metals usually take off and go at a pretty good clip during this part of the cycle. So I've been accumulating lots of precious metals. And I've owned precious metals for many years. So I have different types of precious metals. I have a little bit of gold. I do have silver. When silver's cheap, I was piling into silver. Platinum's cheap, I'm piling into platinum. I own real estate. And then you should still own some stocks and some bonds that you're cycling money out of to go into precious metals. So you're kind of shifting assets around. So we're overweighting the undervalued asset. That doesn't mean that you sell 100% of everything and just pile it into one asset, because there's sometimes that assets do underperform for many years. And something can be undervalued, and it can be undervalued for 10 years, 12 years. If you look at some of the precious metals charts, they've been undervalued for a very long time. And then all of a sudden they have this monstrous boom. But you have to realize the more undervalued an asset is, and the longer that undervaluation is, typically the upside is going to be bigger. Because if you're undermining production and you've built up a whole bunch of inventory, that inventory takes a long time to work off, let's say, if you've built up a bunch of inventory. This was just like the real estate cycle occurred in the mid-2000s, late 2000s. So you build up all this inventory, you remain under the mining costs of that, whatever they're mining, and the situation gets worse because they're going to cut back longer and be further undersupplied as the inventory works its way out. So what we want to do is we want to diversify amongst the undervalued assets. And you keep buying when the signals are still there to buy that asset. And you diversify because some cycles will be in the middle of the cycle, some cycle will be out of cycle, and some will be just beginning. So you want to ride them up, and you should be riding those and building your portfolio based off of the undervalued assets. Now, what happens if you know that there's an undervalued asset? It gets cheap and you start accumulating and it drops another 50%. Do you get discouraged and sell out? No, you don't. You have to reevaluate yourself, evaluate the valuation of that asset. And if you're right, you continue to buy it. I have been down on positions. I started buying platinum in 2019 because I saw how undervalued it was, and it looked like, even though it hasn't broken its downtrend, I'm still going to start purchasing this stuff just because it is so flat, outright cheap, and it was getting below the mining costs of the producers. So I started purchasing platinum, and during that pandemic, platinum dropped out. I would say platinum was in the 900s, like $900. I was buying it for $900 to $950 was kind of my cost that I was getting before the pandemic. Then the pandemic hit and it dropped. You know what I did during that pandemic? I bought silver, I bought platinum, and I bought those metals nonstop until my account had mercy. my cash account. And I kept buying it all. I'm still buying it all the way from pandemic till now because it is underpriced. I didn't worry about my holdings that I had before. I wasn't looking at my losses of purchasing what I purchased in platinum before that. I was focusing on the value that I had in front of me and the opportunities that were given to me and the experience that I had in investing before that. My experience in 08 and 09 during that market crash in precious metals was that silver had fallen out. It had the same exact signature as this past crash. Things crashed. It went all the way down to like $8 or $9 an ounce on the COMEX market. The COMEX is the commodity precious metals exchange, or commodities metal exchange. During that time frame, you couldn't purchase silver from a dealer anywhere near the COMEX price. They had massive premiums. So what I did this past pandemic, and since I had the experience from before, is that when it was dropping, I was looking at dealer prices real time because I knew as soon as those dealer prices started to jack up, I was going to lose my advantage and lose my purchasing price because they're going to jack the premiums up because everyone was going to flood and just deplete their inventory. So what I did is I looked and I bought on that big drop in the beginning before the premiums went up. Then behind it, what happened is the premiums went gigantic in silver. So I bought my silver on the way down. The premiums went up, and then I went towards platinum and started buying more platinum. So somebody asked a question about uranium. What do you think we're at a bottom here? Yeah, timing bottoms extremely difficult. I can't time them to the month or the day. I'm not that good of a trader, and I don't think anyone is. I've watched technical analysis. I know how to do technical analysis. You'll see in some of my videos that I do charting. But it's not the most reliable indicator. You got to look at the ratios. You got to say this is undervalued. And then you just slowly accumulate. And when you see pullbacks, when something pulls back 20, 30%, maybe you buy a little bit. You say, you know what, I'll add. I'll add it here. I'll add it here. And overall, if you think about what you're doing here, and you're buying a couple of different assets, they're all underpriced, what you're kind of doing is rebalancing it as one asset goes down and others go up, if you think about it. Because if we're only buying the most underpriced, undervalued assets, we're adding more to our portfolio of the things that are becoming less of that portfolio, if that makes sense. So, and another thing to think of is when you start seeing strength, as you're adding and accumulating these assets over time, and you start seeing strength, maybe that's when you start doubling in too. You start adding in, you buy into that strength. So we don't want to be sitting in an asset. We want to see an asset kind of drop, break its trend line. If you can see that, you see the trend line break, and then you start buying more and buying more. You buy into that strength. Hopefully this helps you guys hold on to your assets. I do think that uranium is going to be strong going forward, and I do think that precious metals will be very strong going forward. And I think commodities, you need to start looking at commodities. Look at oil, because that oil to gold ratio is cheap. These things are going to be cheap, and the end of this cycle, you're probably going to see copper increase. You're going to see all lumber go up. You're going to see all these things go up. And precious metals and gold, specifically gold, is going to move first. That's why I think platinum is going to move second. I think the other commodities are going to move after that. So we need to be looking at all of these commodities as a whole and say, what do their cycles look like? Let's start picking some of these off. Uranium, oil, natural gas. I mean, natural gas was extremely cheap a little while ago. Same with oil. It went negative. I mean, that's ridiculous. So let's keep looking. Let's keep accumulating. Be patient. If things fall, if we have a market fallout here, which it very well could, just relax. Know that you're buying the undervalued stuff and add. Get greedy when everyone is selling. You start accumulating like mad. So save up some cash. Buy some platinum if you feel like you want to deploy some. And if we get a market crash here, accumulate those assets. This is Finding Value. Subscribe, comment. I really appreciate you guys. Thank you.